Hey everybody, it's Shannon from alphatrends.net. I'm looking at this and realized I didn't make that green. The market was higher here today, the S&P 500, but mixed results for the market on the week. S&P and NASDAQ lost some ground. Russell was a little higher. Semis down 4%. So again, mixed bag all over the place. We had, of course, a holiday shortened week. If it was up to me, we'd have a 4-day work week every week, especially during ski season, and a good storm coming to Colorado here in the next couple of days. Anyways, the S&P, we managed to hold above the anchor from the low. Today we traded another inside day. That's exactly what I was expecting to happen. I told Alpha Trend subscribers, just like we saw over here that was Wednesday. So we saw 2 inside days. What does that mean? Does it mean we're going to reverse back higher on Monday? Maybe, but we have mixed messages. We're below the 5-day moving average. That's that orange dotted line in there. We're below the week-to-date volume-weighted average price. And if we can maintain, the key is going to be to maintain above about 515 or so. I went on Trader TV on Tuesday and said, my trade for the week is to stay short the S&P as long as we're below 550. I think now that you could lower that level down to here and possibly even to this level, but I'd rather see it make a lower low first. Anyways, the bottom line is it's going to take a long time for me to trust this market on the long side when we have all these moving averages, the 20, the 31, and 42-week moving average heading lower. That, of course, equals to the 200-day moving average, and that 200-day moving average is declining. On this daily time frame, we are guilty until proven innocent. We found sellers exactly where we were supposed to. Not exactly, but pretty damn close to exactly where we were supposed to. That is the 20-day moving average and the 2-year anchor in there. So maybe we're going to see a V reversal. It's possible we could see a higher low and then the market turns higher, but I'm not interested in what's possible. I'm interested in what's most likely. And with a declining 20, 50, and 200-day moving average, it's most likely that we're going to break down probably sometime next week. And, if it doesn't, you can say, the people who say, oh, that didn't age well. Well, I'm going to manage risk along the way. I wouldn't get short aggressively until it does this, and I would have a stop above there. It's just that simple. And then as it declines, I would, as it makes a new low here, I'd lower my stop to that lower high. That's the way trading works. It's not about making a call. One of the most ridiculous things that occurs every year in January is they parade out all these strategists who say, I expect the S&P will be up 23% this year. And it means nothing. It's more about how it gets up 20%, because it might drop 15, 25% and then finish the year up 23%. Can you say you were right when you had a drawdown of 25%? It's about how you manage risks in between. This is what I sketched in for subscribers to Alpha Trends last night about what I thought the NASDAQ would do in its inside day. Rally up a little bit, come down, and maybe test this. And in the next coming days, if we break down and hold below 438, I think it's likely we come back down into possibly testing these lows. You can look at it and say it was up on light volume, but it doesn't matter. The volume on the rally does not matter. You heard that right. What's most important is the volume since the low. What's the average price of the holders who bought or sold short since that low? Well, we came down and tested it perfectly yesterday. Always look at these levels as levels of interest that we might be able to get a trade off of. And there was a great day trade in there yesterday if you were paying attention, if you're a day trader. But the point is, the psychology is, and the fact is, if we break below this 438, then all the people on average who purchased in this recovery are in a losing position. The average short seller is now in a winning position. They're likely to defend that position and try to push the market lower and try to force those people out. The best bottoms occur after a test of the prior low, because it's really foolish if you bought on that day to have your stop below that level. People go hunting for those stops, and it's those, why wouldn't you sell, on this breakdown, or, next week if it breaks down further? Why give your stop all the way down there? That's 10%. Do you want to give up a 10% rally in a bearish environment? We're below a declining 200-day moving average. That's a bearish environment. How long it lasts, that's not my guess. I'm not here to predict. I'm here to say This is the path of least resistance. It's more likely to continue lower than it is to reverse higher. The Russell 2000 got a little bit of a bounce here. It's up against the anchor off of this peak where we were 19 days ago. And you know what? Truthfully, it's looking a little bit better from the intermediate term time frame. If you're long in here, then I think your worst case stop goes underneath this level. And maybe it gets a bounce up towards that 20-day moving average and maybe all the way up to the anchor from this peak right here. It's a counter trend trade though. Why is it a counter trend trade? Because this market is below the 20, the 50, the 200-day moving average, and they're all declining. For a better low to be established, we need maybe even something like this. And then if they don't scare you out, they'll wear you out. But right now, maybe for a little bit of a bounce, but there's so much overnight risk that it makes it difficult to trust anything like that. Semiconductors are actually the weaker group here right now. And as we saw, they were down 4% on the week. I think that was at 4.5 maybe. Let's take a look again. It was down, 4.3% for the week, the semiconductors. And these were our leaders on the way up. It's never good when your leaders start to roll over first. They are fighting hard with the anchor off of the year-to-date low, and we're spending time under it. We're showing lower highs. If the semiconductors break and do something like this, say goodbye to the NASDAQ, say goodbye to the S&P. This is your group you want to keep an eye on. And you can say, well, it's only because of NVIDIA. Well, NVIDIA is its biggest component. Of course, it's because of that. Here's what I've been saying over and over again. We are in a downtrend in NVIDIA. The fact is we're below the 20, 30, 42-week moving average. We're more likely to do something like this and come down to the anchor from the 2022 low. It's not a call, but it's saying the path of least resistance is lower. We have a very clear pattern, and I've been pointing this out for months, of lower highs and lower lows. Maybe we get a higher low and this reverses. But again, a trend once established is more likely to continue than it is to reverse. Do you want the odds in your favor, or do you want to be smarter than everyone else and try to guess the bottom? That's up to you. I know that I like to look at it and say, the bigger trend on the daily time frame is lower. It's declining here. It's below the anchor from the low. This probably makes a much better short candidate than it does a long candidate. The financial stocks, they're right up in this zone. They traded an inside day today. They're right up against that head and shoulders pattern, the neckline. We rallied right into the anchor from the all-time high. Right above that is the declining 20-day moving average. Above that is the declining 50-day moving average. This market is likely to roll over. This is what I've been drawing in. This is how I expect it to occur. On Monday, the 5-day moving average will be flat to, at first it will continue to advance. And then if it just goes sideways like this, by the end of the day, the financials will be trapped under that 5-day moving average. Then I think you can short it to a move down to here initially with a stop up here. So that's the way I'm looking at financials. Energy names gaining some ground. They're about to run into this big band of prior support. Support broken tends to act as resistance. Will it in this case? I mean, I'm not gonna bet that it runs right through it. It could, but is it likely? I don't think so. If we look at crude oil, you can see crude oil also, it's running right into this prior band of support right in here at about 66, 67. So if you want to, bet against the trend, the primary trend, which is lower highs and lower lows in oil, then maybe you want to buy the XLE. I'd rather look at it up there and say, okay, if it hovers in here and then we start to see that 5-day moving average roll over, then I'd rather get short here with a stop just above this area as protection. That prior support tends to act as resistance. Let's take a look at Amazon. This is one of the weaker stocks as well. And this one, it's below the anchor from the year-to-date low. It's below the 20, the 50, the 200-day moving average. There's just a lot of, still, this market is in a bearish environment, and it's guilty until proven innocent. If you want to pick the bottoms, then, as they say, you'll get stinky fingers. Look at the anchor off of the year-to-date high in the bonds. That is above us. We're below also the declining 20, declining 50, declining 200, declining year-to-date anchored VWAP. This is not a market to be buying. It doesn't matter what the president wants, lower yields. We're getting higher yields, and you can't fight that. These, this is the 10-year yield chart. We saw it go from 390 to 460. Of course, it's going to settle down a little bit in here, but buyers are regaining control of the yield, which means they're losing control of the bond. Tesla, let's talk about that real quick, then we'll end it there. I've got a subscriber webinar for the Twitter subscribers that's coming up here in the next, we're at the top of the hour actually. But Tesla, again, here's a weak stock. It's in a downtrend on the daily time frame. It tried to hold that 20-day moving average, but we've still got a declining 50. We've got that 200-day moving average is going to start to roll over, next week, because this is where we were 200 days ago. So that 200-day moving average will start to decline, because as we get rid of this data and average it with lower data, that drags the moving average lower. And it'll start to look like this. And we had our so-called death cross here, which, death cross isn't a timing signal, by the way. It's just a confirmation that, these trends are lower on the 50 and the 200-day trends. So when we look at the anchor off of the year-to-date low, who's in control, the buyers or sellers? We saw it run down, and then it came up to it perfectly, and where we had prior support at that anchor off the low became resistance. If you're short, your stop goes above here. If you're looking to get short, maybe on a breakdown here, then your stop goes above that level. It seems like this stock should continue lower. I don't make the rules. I'm just here to interpret the action. Have a good weekend.